good afternoon, good afternoon. You're welcome back today. And today I'm going to still introduce two stuffs, which I call the symmetrical triangle. Symmetrical triangle. And we are going to look at the bullish variant of the symmetrical triangle. And then we're also going to look at the bearish variant of the symmetrical triangle. Okay? I am bringing up this because in identifying a trend, what I said earlier is that market doesn't just move in one direction. By that I mean, you cannot just see the market just going straight this way. No, it doesn't do that. So what it does is that sometimes it moves in a wavy pattern, which I explained yesterday. Okay? Yeah. It goes that way. That's how the market moves. Then the next thing is that if a market is going in a particular direction, say a downtrend or an uptrend, there are some patterns the market makes in an uptrend or in a downtrend, and you will know that these patterns are a continuation patterns. Let's just take an example. Someone is going up, and then while he is climbing up, for instance, he decided to take a rest and then continues his upward movement. Okay? This particular juncture, before it continues its upward trend, is called a continuation pattern. So what we say is that a market could be going in an uptrend or a downtrend, and sometimes can create a juncture and then continue its initial movement. That juncture, or that point where it creates a particular pattern in form of as though he wants to do a little rest, and sometimes that pattern may look as though he's trying to retrace, and then later he continues that particular upward direction. Such kind of a pattern is called a continuation pattern. And there are several continuation patterns the market can make. One of these is what we looked at yesterday, which is called the ascending or descending triangle. The market can be going this upward direction and then give us an ascending triangle where it comes something of this sort and then push on again. Okay? This kind of a pattern where the market is just making, it's just as if there's a barrier here. The market is coming upwards, goes, drop, goes, drop, goes, and then break out of it and continues. This is called a continuation pattern. Because this is the initial direction is what? An upward movement. It now did an ascending triangle, okay, and then breaks out and continues this movement. So this ascending triangle is looked at as a continuation pattern. Sometimes it can also be the descending triangle, that is in a downtrend, and then it makes that pattern and then breaks out and then continues its downward movement. It's called what? A continuation pattern. But if we have a pattern that it is going upward and it gives us a pattern, and that pattern tends to change the direction of the market. Okay? Instead of to help the market to go in that same direction, it changes the trend or the direction of the market. That is no longer a continuation pattern. So for today's class, we are looking at continuation patterns. Okay? And part of that continuation patterns we looked at, number one of it, we have looked at yesterday. We looked at ascending triangle in a very simple version. We also looked at descending triangle in a very simple version. Okay? We said that the ascending triangle, okay, whenever we see it, we know that the market wants to break what? In an upward direction. Most times you will find ascending triangle in an upward trend. So when it goes, the market is going upwards, it tends to make a kind of a corrective pattern. But that corrective pattern is something that will aid it to continue its movement upwards. So that particular pattern is called a continuation pattern. But when the market is moving in an upward direction and it seems to make a corrective pattern, and that corrective pattern changes its direction in the opposite, it's no longer a continuation pattern. Is that okay? So yesterday we looked at the case of ascending and descending triangle. Today we are looking at a case of symmetrical triangle. Okay. In the case of symmetrical, this is what we are saying. That we have the market here going in an uptrend, starting here. This is an uptrend. The market is going upward. And all of a sudden, it comes to this particular point and do a retracement. Came down. But when it came down in form of a retracement, the retracement did not come to the same level where it started from. It pulled up again. But you will notice that when it pulled up again, point 1 is higher than what? Point 3, the next one. It's just like it is making successive lower highs. Okay? Yes, it's making successive lower highs. But while it is simultaneously making successive higher lows. I'm talking about symmetrical triangles. It is making a successive lower highs while it is simultaneously making a successive higher lows. Okay? Because this low is higher than this low. So it's making higher lows. Why it is making what? Lower highs. So it is coming close to, it comes to a kind of a confluence point here. Like it's creating an apex. Okay? But the direction of the market is that the market is starting from, is going up. Okay? Came to a point, retraced down, but did not come to the very point where it started from. Goes back again, retraced down. So what we are looking at is this. We are not interested because of the direction of the market is actually upwards. Now, even though it retraced, but we discovered that it did not retrace up to the point where it started from. It went again, retraced. It did not retrace up to the next point again. So it means that it is gradually what? Rising. Okay? The overall direction is what? Upward. Though when it goes, the high it makes, okay, it keeps on making what? Lower highs. But it's gradually piling up, giving us what? Higher lows. So it's mounting pressure until at this particular point it breaks out and then continues its upward movement. Such kind of pattern in an uptrend is called a symmetrical triangle. And that kind of symmetrical triangle is called a bullish variant or a bullish symmetrical triangle. So sometimes you can see a market rising. Okay? You can see, like, look at what happened here now. Look at the chart. You see this market rising. Right? And then it does this retracement. Someone who says, it's like this market not changed trend, right? It has changed trend. It's no longer going again. But look at what happened. It moved up from here. It drops. Let's look at it that we are starting it from here, from this point. Okay? It drops. It goes on again from here. it drops. You will discover that in each case, it is making what? Higher lows. All right? But making what? Lower highs. The overall direction, sincerely speaking, is going upwards. Is that okay? Until here it breaks out, retests that position, and continues buy movement. So, but if you understand how to identify that these patterns you see there are sometimes corrective patterns that the market will make, you note them, and then so continuation patterns rather the market would make, and then when it makes them, it's not trying to tell you that it wants to change the trend. It's trying to tell you that, look, it's like I'm taking a rest, okay, but I will continue my pattern, my trend rather, in an upward direction. So it's left for you now, when you see this particular pattern, knowing that, okay, wow, it's like this is giving us a symmetrical triangle here. So that means that after this, the overall direction of this market is still a buy. So someone who says it might say, okay, let me just scalp. Depending when the market will break out. And then this is where it breaks out. It came, retest on this particular point. And when someone is seeing this now, say, it's a sell market. No, it only retested here and then boom, it goes continuous for that particular buy movement. Can you imagine this? Okay? The buy movement. So the market usually makes this kind of patterns from time to time. Okay? There are several patterns the market makes in, it's just like, how do I put it? Like in an express road you're going, sometimes you will see these bumps. Okay? After you pass the bumps, you continue your movement. Sometimes you might see a pothole. It will go on the pothole, come out of it, continue your movement. So the market also have some bumps. It might be going straight. It will create a kind of a bump, which might be like a symmetrical triangle. It could be an ascending triangle. It could be a descending triangle, and after which it continues. Now, the thing is your ability to identify that pattern. That's the key. But what we are trying to say that for a bullish variant, this is an uptrend. You will find this particular bullish variant in an uptrend. That the market is rising. And while this market is rising, sometimes it might get to a certain point and retrace. But it will retrace to a point where that is a bit higher than where it started from. Then it will rise again. And you might think that as it's rising again, it's going to surpass this point, but it gives us an high lower than the previous high. Now, a trader now who looks at this will say, so long as the market has made an high lower than the previous, it means that the change of direction is imminent. But that is not true. Because before you initiate a change of direction, you must also look at the lows it is making. What kind of low is it making? Because now this one is giving us lower highs. But what kind of lows is this one giving? Is it giving us an higher low? Because now, whenever we are seeing lower highs and higher low, then, and that shows that it could be that this is a bullish variant of a symmetrical triangle. So the market might likely still go upwards. Okay? Because most times, what people look at is majorly this. If the market rises, retrace, and give us an high that is lower than the previous high, probably a change of direction is imminent. But that is not always true. When you are looking at what is happening here, also look at what is happening at the lows. Because that is where we can define what a symmetrical triangle is formed, whether a symmetrical triangle is formed, and to know if that pattern is a continuation pattern or a reversal. Okay. So we are saying that for a symmetrical triangle, the market, the structure of a symmetrical triangle is that it gives us lower highs, but what? Higher lows. Okay? For the case of an uptrend. Okay? For the bullish variant. And this kind of pattern is called what? A continuation what? Pattern. Because the market is actually going this direction. The market is actually going this direction. But now, it gave us a symmetrical triangle and then continues its upward direction. So this pattern is what? A continuation pattern. Let's look at the bearish variant. Okay? Just like what I showed here. Market rises to this point, it drops. And it came again to this particular point. Someone who sees it now say, okay, this high is lower than this. So since it could not get to this point or surpass this point, probably a change of trend. But that is not true. The way to judge it accurately, while you are looking at the highs, you should also look at the lows. The high is making what? Lower highs. What is the low making? Is it making up higher lows? If it's giving us higher lows, then probably it is giving us a symmetrical triangle, which might be a bullish variant that might be a trend continuation pattern. Okay. Now, the bearish variant. On the case of the bearish variant, the market is coming downwards. Okay? Hits a point, retrace. But it did not retrace to the point where it started from. This is where it retraced to. And then dip again, retrace. Okay? Dip again and then break continues. It's downward trend. Now, what do you notice again for the bearish variant? Is a bearish variant or a bullish variant is the direction of the market, where it is coming from, whether it is coming upwards or downwards. So if the market is coming upwards and then it now gives us this particular pattern, this continuation pattern, then we know that this market wants to continue its downward trend. Like just as this case of this one now, we see that this market is rising. It now gives us a symmetrical. So once I have captured the symmetrical, my overall concept is that this is a trend continuation pattern. So this market definitely might likely continue its buy movement. So why I will come into that buy is upon the time when it breaks out of this particular point. If you see it breaks out, it retests this point, and then that's it. Never came to that point again. Okay. So your ability to identify these patterns can help you a lot in your trading. Right? Someone who sees this particular pattern now might think, okay, the way this pattern, fine. Some other person might just look at it and say, okay, fine. Let me just drop this trend line here. And then if it breaks out here, but it doesn't even know, it just only places a trend line here. If it breaks out at this point, break out, and then I trade it. But someone who understands sharp patterns will know that, okay, this is a symmetrical triangle. And at this particular juncture, once it breaks out, probably retest and move it. Okay? So we are trying to say that in an uptrend, there are continuation patterns. In an uptrend, there are corrective patterns. And after that correction is made, the market might likely continue its direction or reverse back. That example of these patterns that you can find in an uptrend or downtrend is number one, symmetrical patterns or symmetrical triangle. Yesterday we look at the case of an ascending triangle. So you can see an ascending triangle in an uptrend. Okay? And then you can also see a descending triangle in a downtrend. Now, when it comes like an obstruction, in the flow of the trend. Okay, now look at this one is going, then this, you see, yeah, it looks as if it's ranging, right? An obstruction, but after which the trend continues. That's why it's called a continuation pattern. Then there's also another case where it is going, you might see an they come in front, they look at them as, when you're going on a road and you find a bump, like an obstruction. But after the obstruction, continuation of your journey. So that is how these continuation patterns are. So examples of continuation patterns we have: the ascending triangle is a continuation pattern. Descending triangle is a continuation pattern. Symmetrical triangle is a continuation pattern. And then we also have the symmetrical triangle, we have the bullish variant, we have the what? The bearish variant. And we said that the symmetrical triangle is composed of lower what? Lower highs and higher lows. And what determines if it is a bullish variant or a bearish variant is where the initial direction of the market began from. If it starts up from the going upwards, we say what? It's a bullish variant. If it is what? Downwards movement, then we now discover it's what? A bearish variant. That means that the market wants to continue its downward what? Trend. That's why they are called continuation pattern. Okay, like let's see. Let me see. Now, do you see this now? You see that this market is what? A buy move. Is that correct? Right? And then we now have this symmetrical. Is that? It looks like an obstruction, right? Because if you see this flow, it's supposed to just go straight, right? But this one gives us like an obstruction. And then after which, it continues this direction for a buy. You see? All right? So, that is why they are called continuation patterns. So, seeing them, if you're not very careful, you might think, what's going on in this market? I don't understand. Well, maybe this one, the market is about to change trend. Okay? Because it is sometimes, in fact, it is always characterized with lower highs. So when you are seeing these lower highs, you might be tempted to think that this market is about dropping. But when you are seeing this, look at the lows it's making. Is it making higher lows? That might be a what? Symmetrical triangle and a trend continuation pattern. Okay. Any question, please? If I'm clear, just let me know. If you want me to explain again, just make me understand. For those online, if it's very clear or you want me to explain again, just make me to understand. Because I just only want to, I want to take I told you yesterday that I'll be taking this thing in chunks. Okay, yesterday we looked at ascending triangle and descending triangle. Today we are looking at symmetrical triangle, the bullish variant and the bearish variant. And what we are saying again is that whether the bullish variant, the bearish variant, ascending triangle, descending triangle, they are all called continuation patterns. Yes, they are all called continuation patterns. All right? So we are looking at it as a gradual process. So we said that for a symmetrical triangle is composed of lower highs and higher lows. Okay? That when we see that kind of a pattern in an uptrend or downtrend, what we have succeeded in capturing is called what? A symmetrical triangle. Is that okay? You know, in the case of an ascending triangle and a descending triangle, we saw that in an ascending triangle, the market is making successive what? Higher lows, but it's not making higher highs. Is that correct? For a descending triangle, as of yesterday, we said the market is, for a descending triangle, the market is successfully making what? What's it making? This example of a descending triangle. What? Lower highs, but what? There is no what? Higher lows. No higher lows or lower lows. Is that okay? It's at the same level. The lows are of the same level, but we're only making what? Lower highs. All right? So both symmetrical triangle, ascending triangle, descending triangle, they are all continuation patterns. It tells us that in an upward trend, if we find that structure in an upward trend, the trend wants to continue. Okay? If you find it in a downtrend, that trend wants to what? Continue that downtrend. If you find it in an upward trend, it wants to continue what? That upward trend. So that's what they are called what? Continuation what? Pattern. So sometimes the reason for this is that when you see a market going in an uptrend and you begin to see, let's look at this. Let's look at this. Let's look at this. Look at this market, for instance. Guys. Look at how far this market has gone. And then suddenly you begin to see this kind of a thing. Some might begin to think that, okay, the market is exhausted. Probably it wants to come for yourself. And particularly, one of the things people know whenever the market wants to change a trend is that it will be making lower highs. Now look at it. It's making lower highs. So any person who sees this one, a novice, let me just use the word, a novice who sees this one might think, okay, this market, it's time for it to change trend for itself. But he never knew that what is the market just doing here is just a continuation pattern to continue its buy movement. So what I'm trying to say is that while you are looking at the highs of the market, if it is making lower highs for a change of direction, also check if it is making higher lows. Because if it's making lower highs and making higher lows, it could be a continuation pattern. So you don't just only look at the highs, also look at what? The lows. Before you conclude which particular pattern, whether it's a reversal or a continuation pattern. Okay. Are we in order? Any question from our online audience? Any question from our online audience? I want to introduce a particular strategy now. Ascending triangle. Yes, it's a continuous pattern. It's a continuation pattern. Ascending triangle is a continuation pattern. Descending triangle is also a continuation pattern. Symmetrical triangle, continuation pattern. 1 hour. I'm using the 1 hour time frame. Okay. Now, let's look at a simple strategy. Yesterday, after our ascending and descending triangle, I also initiated a simple strategy. Let's look at another simple strategy today, just to cap up today's class. Okay, let's look at this. Guys, I want to teach us something very unique and very profound. You know, yesterday I taught us how to use this channel to capture trend. Okay? That whenever this market changes a trend and this one aligns with it, you can trade it. I'm not here to talk about yesterday's strategy I taught. So then I want to initiate a new strategy still with these same tools. So today we are going to do a kind of a multi-time frame analysis with our TMA MACD, this indicator. And the way we want to do it's a very simple strategy, but very sweet one. Trust me, you will enjoy it. Here, what we want to do is that I will look at what is going on in 4 hours time frame and use it to judge whether to come into a market or not in a 1 hour time frame. Now, here is it. Look at this market, for instance, guys. You will notice that this, our TMA MACD, has turned for a sell in 4 hours. Let's just say we discover the turning for a sell in 4 hours here. So this is where it turned. This is Euro card. All right. Sell that will occur in 1 hour. I will not take that sell. I will wait when the market, this our TMA MACD retraces, okay, and realign for a sell. Is that okay? Let me come back again. If we look at our 4 hours time frame, let's say the 4 hours time frame just began its sell here. What I'm looking at as a sell is my TMA MACD. Let me just increase the thickness of the line. Okay, so what I'm looking at as a sell is my TMA MACD. This is where it turned. Around here it turned for a sell. When I go to the 1 hour, 1 hour is telling me that at that same point too, it has turned for a sell. Look at the line here. It has turned for a sell. But this initial sell, I will not come into it. I will allow it to go on for that sell and then retrace. This is where it retraced. You can see this movement. This is a buy move. So this is where it retraced. Okay. And then realign for a sell. This is where it realigned for a sell. So this position is where I will come in for my buy. Sorry, for my sell. And at that point, my 4 hours is still telling me a sell at that point. Is that okay? Still a sell at this particular point. Now, and then my 1 hour has gone for that sell, retraced, and realigned for the sell. So this way I will come in for that sell. Probably put my stop somewhere, some few pips above this point, and then run to this point. Now, I will be in this market until my TMA MACD turns green. I will exit. So I'm going to exit around here. Okay. So from that point to where I'm going to exit, how many pips is that? From this point here, enter the market around here, to this point where I'm going to exit, that is about 113 pips. That's huge. Okay. It's a very simple style of trading. Okay. Like right now, what I'm waiting for again is that I said I won't come into this market until this particular MACD has finished retracing. Once it retraces and then gives me a sell signal, I will come in again for that sell. I'm waiting for it. Okay? I'm waiting for it. Now, what happened is that because my 4 hours is still telling me what? A sell. Is that? And now, my 1 hour is giving me a retracement. So once it finishes retracing, and then gives me a sell that is the same with the 4 hours, I will come in again for another sell. In this particular kind of style of trading, I'm just playing around what is going on in the 4 hours and in the 1 hour time frame. So once my 4 hours gives me the direction, and then my 1 hour aligns, I will wait, let the 1 hour aligns go, and then come back, retrace, and then realign again. The second realignment is when I will come in. Then if it goes and then retrace again, the third realignment, if the 4 hours is still intact, I will come in again. So I don't come in the first alignment. Let's look at another pair. Let me just buttress it more if the understanding is very clear. Let's see. Let me look at Euro USD, for instance. Okay. This is 4 hours. Let's check 4 hours. Now look at Euro USD, for instance. For Euro USD, this is where the market started from. Okay, it changed. The 4 hours changed for a sell. Is that okay? At that point where it changed for a sell, let's look at the 1 hour. 1 hour is a buy. Is that okay? It's a buy. So this is where the 1 hour came for its own sell. Yeah. But I will not come for that sell. I will allow that sell to go. When it goes and then realign for another sell, I will come in. So now, if you watch this market went for a sell up to this particular point, and here, the market go in for a buy. You see this green line now? You go in for a buy, continues that buy, all right, goes in, until now, here, it now realigns for a sell, okay? And this sell market is still in tune with my 4 hours. Look at 4 hours. Look at it. Is that? So I will come in that market for that sell and stay in that market until this TMA MACD turns. So this market, if one has taken this market day before yesterday was Monday, okay, that's on Friday, we will have been in this market, it will have exited yesterday night. Because it was yesterday night in the evening that they turned for a buy. So I'm still waiting for this market. What am I waiting for? Is that I want this buy to go retrace and then realign for a sell again. Once it realigns for a sell again and I check my 4 hours is still giving me a sell like this. I will come in for another sell. So in this strategy, we are only playing around with what is going on in the 4 hours and in the 1 hour using our same MACD. Very simple strategy, but I tell you it works. You know, let me tell you something, guys. Sometimes the things that works are very crazy. Hear this particular word from me. The complex things of life are coded in simplicity. You might think that because something is very complex, that's why it's powerful. No. It is the simplest things that are very powerful. Quote me anywhere. Those things you ignore and you feel they are too simple, they are the most powerful things. That is just it. So don't ignore those simple things and you look at them. You are not making progress because those simple things you ignore are the things that will have made you more powerful. You are busy chasing those complex things. Meanwhile, the things that will have made you so powerful are coded in simplicity. So go for the simple things and you'll see how amazing your life will turn around. Thank you, guys. I don't want to waste much of our time. Let's end the class section here. But if you understand what I just explained or you want me to explain further, just go and let me know from you if you want me to just do further examples before we conclude. Yes. All right. Nice one. The understanding is clear and there's a simple strategy. So tomorrow we'll begin again same time, but tomorrow we'll start a bit more earlier at 12 p.m. WAT, West African time. Thank you so very much and bye-bye. Welcome.